Hey, what's up, you guys? Hopefully, y'all are doing well. Here in California, it is raining like mad. We have the biggest storm coming in this weekend over the last several years. It's pretty crazy. It's rainy, it's windy, it's nuts. So let's see if it affected the stock market today. And actually, it does not look like it had too much of an effect on the stock market. So in the bottom left-hand corner, we have the S&P 500, and you can see that we've had a great move up over the last week and a half or so after this long consolidation over the last 6 weeks, 7 weeks. So we had this big move up after the election, then we had a long consolidation, and then we had a move up too. And as you know, a lot of times these things, the consolidation here will happen at about the 50% line. So if we had, a 5% move up here before the consolidation, you can oftentimes expect a 5% move up after the consolidation. So that would take us right around the 2400 mark. So that's kind of what we're looking for. At the very least, all of my indicators are still long the S&P 500. Just like we talked about last time, which was somewhere in here, um, saying that all my indicators were along the S&P 500 versus TLT. So if you look in the upper left-hand corner of your screen, there's the TLT. And now let's take a look at this. So we have a low here, a low here, and a low here. And they've kind of been increasing, which is what we were talking about last time. And you can see the highs have been decreasing. So what we have is like a pennant formation. So what we're looking for is a breakout either to the upside or a breakout to the downside. And a lot of my indicators, they oscillate between the TLT and the S&P 500, but that does not mean that they can't both go up or both go down at the same time. So we could easily see a bounce in the TLT up to 125 or up to 130, something like that, looking for basically a 50% retracement from here, 140, all the way down to 115, which would take us around 130-ish. So that would be our 50% retracement. And if we got that, it does not necessarily mean that the S&P 500 would move down because, as you know, correlation is not perfect, and they can both move in the same direction at times. Maybe over the long run, bonds and stocks have a negative correlation, but over the short term, they can both move in the same direction at some times. When there's a lot of money moving into the stock market and in general investments, if there's a lot of money pouring into 401ks, that's going to be diversified. So that will go to all different asset classes. So that's very possible. We'll see if that happens. I'm not saying that's necessarily going to happen, but if we're looking at 2400 in the S&P 500 and we're looking at 125 or 130 in the TLT, then they both have to go up. That's not necessarily going to happen. Like we have this pennant in TLT. If we break out to the downside, then rates are going up for a little bit. So we'll see. Over the long term, it does look like rates are going up. So it's just a matter of when, really. Even if we do get this 50% retracement to 130, that could be a short-term thing, and then we could see a bigger move down. It's very possible, especially if we enter an inflationary environment. So speaking of which, up here in the right-hand corner, right top corner of your screen is the dollar, and you see the dollar had a really nice pullback, actually, really significant pullback because we had this run from 96 all the way up to 103, 104. Even starting before the election and then running all the way into about the new year. And then this year we've seen this pretty significant pullback. Most people are calling for a continued rise, so this would be your 50% retracement. So this is 100. This is about 103, 103.8 at the high, and from 96. So 96 to 104 is 8 points. So 50% pullback would be to the 100, which is where we hit. So we've started making a move up from that again. So probably see a little bit of action in the dollar. And in general, an increase in the dollar eventually will bring down earnings in the S&P 500, the multinational stocks. So that may put a damper on the stock market. as well as so that kind of goes hand in hand with raising rates by the Fed. So all of these things are going to be in play shortly in the next several months, really. People are calling for the next rate hike in March or April, most likely April or June, but March is on the table. And then lastly, just wanted to catch up on oil because oil's been pretty interesting. Well, actually, it's been very dull recently. So, we had the move all the way down to 26, and then we recovered up to the 53, 54 area, and we've just been in this sort of boring little tiny channel here between 52 and 54. We've popped out a couple times, and we thought these would be significant, and these would drive us either to higher or lower prices. But then we popped right back into this channel. So right now, if you look at it, the lows have been going increasingly higher. So that may point to a breakout upward. And like we talked about at this breakout, it was a pretty low. Actually, it was this breakout. It was a low quality breakout. So here we go. It wasn't a very good breakout, and as a result, we just stayed in this channel forever. So perhaps coming up, maybe sometime soon, maybe not, we may see a breakout towards the upside. And if you look at the 200-day moving average as well, it's upward going. The 50-day moving average, it's upward going. So all these things are kind of pointing to a breakout upward. But we'll see. All right. So that's the market for this week. If you look at the commitment of traders report, a lot of the dealers are still short. A lot of the big institutional investors are basically fully invested, as are retail investors, basically fully invested. So I think the market makers may be looking for a downturn or a pullback, possibly because everybody's fully invested. So that's what they look for, right? When everybody gets fully invested, they start going short. And market makers can definitely move the market. So it's hard to say if they're going to try to move the market anytime soon. It looks like the levels of investment have been pretty stable. So market maker investment has been short all year, and it's kind of been vacillating a little bit, just in a different range. So they were very long at the end of the year, and then around the start of the new year, they became short, and they've been vacillating around in a shorter range. So if that makes any sense, yeah, hopefully it does. So we'll see when that finally takes effect, or if this is sort of a new normal level for them, for at least for a little while. The VIX is still pretty low, so institutional investors, it doesn't look like they're buying a ton of protection. So anyway, okay. All right, hopefully you all have a great weekend. Hopefully the weather's better where you are, and enjoy it. All right, have a good one. Bye-bye.